Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, March 11th, 2019. In this video, I'm going to do an update on the precious metals and mining stocks as well. We'll hit on the US dollar euro pair. Before I get into the video, just let me say this. I'm doing this video more so as an update by request of a member in the trading room, and that request had 3 thumbs up. That tells me that 3 other people also wanted an update on that. I had intended to get to this Friday, I had done that. Now, so what I wanted to say, I don't see any actionable anything that stands out right now. So if you want to skip this video, I do keep an eye almost on a daily basis, if not a daily basis, and sometimes throughout the day on gold, the miners and all that. And I try to make my videos, whatever I'm covering, I try to make it timely. I don't want to just put out content and videos for the sake of doing it. Therefore, you might just become numb to, okay, every day a daily update on GDX or the market. So again, there are some levels. If you are interested in gold and the miners or currently have a position, I do think I have a pretty good read on the chart where the levels are, but just more so intermediate longer term. Right now, near term, the charts are a little bit obscure. So we'll go ahead and dive in. I'll show you what I see and what I'm thinking. We're going to get back to gold. Of course, that's the whole point of this video, to look at gold and GDX. But I want to tell you what's been driving gold and therefore what we need to keep an eye on. Over the years, I've said many times that I believe that any analysis on gold is incomplete without analysis of the US dollar. I proxy that you can look at the US dollar index, you can look at the dollar ETF, UUP, or ETN, technically UUP, the US dollar ETN. But this is my favorite preferred trading and charting proxy. It's a Euro-US dollar pair. It's going to trade around the clock because it's a currency pair, and it's basically looking at the dollar upside down. So this is a euro compared to the dollar. So you can see the euro's been sinking against the dollar. I have more levels on this chart, but it's too busy. I didn't have a chance to clean it up, but I'll just here, you know what, I'll replicate that trend line on this other chart that's a little more clean. So here's what I'm watching. In this, I feel pretty confident on that there's a pretty good sized move coming, meaning a drop in the dollar and a rally in the euro. And it's this large falling wedge. You can see it here. This is a daily chart we're looking at. With daily candles. These are your divergence lines. They continue to build as the euro sinks lower against the dollar, but pretty strong divergences. And when we look at that out on the weekly chart, you can see there it is. Just like we had divergence building here at this low, that led to that strong rally in the euro, big explosive rally in gold. And remember, the euro, since the euro is going up, dollar's going down. That is what drives gold prices. So you can see here all the divergent lows and highs in recent years, and that last divergent high led to the correction that we're still experiencing right now in the euro against the dollar. And we're setting up now. This thing could break out any day now, or we could continue to drift down. I think at most down to here at 108-ish level or so. But before we get into that, let me flip over to one more chart here and show you. I've done this many times over the years, but I realize there's always people coming in and out of the site. This charts the euro US dollar pair, which we were just looking at, against gold. And fewer asset classes have such a tight correlation as gold and the US dollar. And the reason, it's simple. Gold, especially the gold we're trading here, yes, you can buy gold denominated in different currencies, but globally, and the ETFs like GLD, gold futures, GC, things you're trading here are priced in US dollars. So it's very simple. Free supply and demand, let's just hold that constant. All other things being equal, when the dollar drops, it takes more dollars to buy an ounce of gold. And when the dollar's strong, the dollar rallies up, it's going to take fewer dollars to buy that same ounce of gold. Therefore, that's what's going to determine the price. That's why. And as I often say, I don't think there's a single correlation out there between two completely different asset classes, such as the dollar and gold here, that always have a perfectly correlated or inversely correlated relationship. As I say, there are often disconnects. But if you look at the larger trend, and look, we're going back to 2009 here. If you don't pay attention to the differential in price, in other words, the distance here and here, what you want to look at is when one's going up, is the other. So remember, again, we're watching the white line going up means the dollar's falling, and you can see the correlation there. So you can see they both peaked and they reversed. They were both going down, up. So the correlation is very strong. In fact, there's only 2 instances on this chart where there was a noticeable disconnect for any period of time. That was back here. This chart just tail ends into the financial crisis. There's 2009. What happened is the dollar was rallying because the financial markets around the world were in chaos, and the U.S. dollar, although we continue to print a lot of money, it's still considered the safest, safe haven currency around the world. So, money from other countries will come to dollar-denominated assets during times of financial turmoil. We saw that there. But you also saw gold rally with a dollar because gold is another flight to safety asset, just as treasury bonds are. So that explains that disconnect back there. And the only other time right here, you can see we had a disconnect right there for a little while. And then the correlation continued. So again, extremely tight, almost a 1-to-1, not in percentage terms, but directional. That's, again, because if the dollar drops 10%, doesn't mean gold's going to go down 10%. So that's where you're going to have a differential there, and that's why you'll see sometimes the lines are separated farther apart than others. And again, it's so I've made that clear. Now we're seeing a disconnect, and that is unusual. What happens is you always get the mean reversions. That disconnect will not continue, but it can continue for a while. So with that being said, I think it's important, in case anybody's new to my analysis, why did I spend so much time on the euro US dollar? If we get this right, we get the call on gold right 90+% of the time. And there it is. So big falling wedge. I think I showed it to you on the weekly chart as well. And again, you can see all the divergent highs and lows. They do work, not 100% of the time, but well over 90% of the time. Once you get them, you're going to get a trend reversal. And sometimes the divergences can extend. So this is only potential divergence. In fact, you can see these indicators, the PPO and RSI, still pointing down. That means the momentum's down. That means there's the potential to burn through or negate these divergences if we undercut the recent lows that mark the divergence. Divergence is simply prices going one direction with your indicators such as the PPO and the RSI going another. That's divergence. So there it is, and this is a weekly chart. So I can tell you it's not going to break out today. You can play around, as I showed you a minute ago on the daily charts. You can play around a little bit with the trend lines. Go back to the daily, and you can see I have a couple different. I have this yellow trend line here, but these two come in together. So this is really the area. Give it to you on that clean chart. These two right here. So I think if you get a pop there, although there's still work to be done, there's a reaction high, there's another one, you need to take those out, but that could be the catalyst, and we're now at the bottom of the wedge. So like I said, I don't think, unless if you don't want to risk jumping the gun, you want to wait to see a clearly bullish reversal or breakout or something along those lines in the euro US dollar. All right, so now we get back to the charts of gold. What levels to watch there? If you recall, this was a active long trade and long-term trade recently. Book profits there, sidestepped it, and then started pointing out the divergences for a while that were building right here, this divergent high. Again, I'm using GLD, the ETF, the daily chart. This ETF does an almost perfect job of tracking gold, unlike some ETFs or ETNs. This one does do a very good job. So you can chart this or gold futures. You're going to have very similar results. So there it is, divergent high. That was a red flag. And then, of course, the breakdown of the well-defined uptrend line, that was the catalyst for the selling and the sell signal. We've came down, and in the last video, I think it was March 1st, so about 10 days ago or so, I had mentioned support coming in anywhere from here and these three levels, 120 next support. Worst case scenario, I don't see it happening this time around, but worst case scenario, to keep the longer term bullish scenario intact, move down to 117.40. And it is possible, if you look at it this way, this could be flagging type action. It's a little sloppy, but remember, the gold GLD, the ETF, is only trading, you're seeing trades from 9:30 a.m. Eastern Time up to 4 p.m. So gold futures are going around the clock. We'll get to those in a second. It's not a perfect flag on the futures, but it's something to watch. And it would project all the way down there, roughly to that 117.40. That was a key level before. That's where gold broke out right here and really started this rally. So at this point in time, like I said, near term, hard to say, but I can tell you these are levels to watch. We undershot that 122.40 support. We bounced back, got above it, and we're trading right around it right now, close enough to say we're on that level. And again, if we fail there, look for support here. I can't make a strong case to step in buy, but I can tell you this. If I had to either go short or long gold now and throw away the key for the next 6 months to a year, I'd go long. I see the PPO starting to curl up right here, and it's still the signal line. There's the white line here, the 9 EMA is still above the 0 line. That indicates the trend is bullish. It was bullish when it crossed right here, and it was bearish when it crossed here. It said get out of gold, stay out of gold till that point, get back in, and that trend remains bullish right now. That 0 line often acts as support when tested from above, so this would be bullish to see gold soon. Doesn't have to happen right away, but soon start to move up, and maybe this correction was enough to satisfy that divergent high and that price channel breakdown right there. Weekly chart, bigger picture, so, big symmetrical triangle I've been focused on. And you can play around with these lines. You can see there's, I'm looking at this point here, a lot of reactions. So if I pull that line down a little bit, I did have it higher recently. Like I said, the charts are dynamic, and so is my analysis. So we can come down. This actually captures, instead of just that one little candlestick reaction I had about at 130, right there at 130, we capture all of these right here. And now that's just a breakout and a back test. So from this, that I can say if you're a long-term investor, trend trader, this is an objective entry here. Back test of a breakout of that symmetrical triangle, and as I've been saying for a while, my next target would be that 130-ish area there from here. So that'd be a pretty decent lift in gold, and of course you get a lot more bang for your buck in the miners if that does play out. We'll watch this potential bearish PPO crossover. We're also rolling down off the 70 oversold level, and so I can say this: if this marked the start of a new bull market in gold, and so far that appears to be what we may have, because you have three higher lows, those major reaction lows right there. However, what you don't have, what's lacking in for a true definition of an uptrend, is a series of higher highs. So what we need to do, again, we need to take out that 130. If we do that, that will be bullish in so many ways. It'll be bullish because it's a very well-defined resistance level. It's the bottom of this basing pattern here, this big bottoming pattern here in gold, and you can see so far, gold continues to make those lower lows. So to keep the bullish, longer term bullish case intact, ideally gold holds above this trend line. If it comes back into the triangle, ideally it holds in and does not take out this previous low. If it does, it doesn't have to mean we're in a new bear market. It could mean that gold's just continuing to base here, a multi-year basing pattern, and may want to come anywhere down within there. So those are the things I'm looking for, and again, that's when you'll almost certainly see gold as a official long trade again on the site. And I'll probably get in before then, maybe for at least that would be more of a strategic longer term trade, strategic entry. We might have some tactical trades here. Mainly focus on the long side right now. I'm not too keen to short gold right now. Okay, and in gold futures, symbols GC for gold futures. You can see on the 60-minute chart, you can, we've been working our way up, and again, the bigger picture is still an uptrend despite this recent correction. We continue to go on up. I mean, if I drew a trend line that way, we broke that trend line, which I already showed you on the daily chart. That's the daily trend line. But so far, we're still well off, and we're still above this previous reaction low. This was a major reaction low. That low fell a little above that so far, so we'll watch that. Now, what I've drawn here, if you recall, if you watched the last update, the video I did on, I think it was March 1st, I pointed out potential divergences around this point when gold was falling to this level, but I was very clear that they were only potential, meaning they could be burned through, and they were burned through. So potential divergences. or only that. Even if they're confirmed, you still need a buy or sell signal. So what I'm watching right now on the 60-minute chart of GC is another potential divergence here. You can see we'll almost certainly get it unless gold really took a dive from this point, because the indicators are really making much higher lows right now. And so what it would look like is something like this. So if gold came down here, and there's some nice support there, and that's about 1280 on GC. So if it comes down to or below that level and then reverses, you can see that we'll almost certainly have put in a nice strong divergent low here on the 60-minute chart, and that especially gold falling to support on the 60-minute chart time frame, that to me would be a very objective and high probability entry. So that's what I'm looking for right now if we get that. It may not get there. If the market turns around and takes another leg down this week, you know, this was due to last week's sell-off, this lift in gold, and now gold's coming back in. So remember, there are two things that drive gold. Of course, supply demand drives anything, but the two variables outside of that are the US dollar and a flight to safety. Sometimes it catches a flight to safety bid, usually it does, sometimes it doesn't, but again, and sometimes that correlation with the dollar is very strong, but for the most part, those are the two variables, and you know, again, 90+% of the time they do come into play. So what you want to see, if we continue to see the market lift early, you know, this week, then you may get that snare and you may get that buying up here. And if the market all of a sudden tomorrow takes a big dump, then you might see another lift up here in gold. So really, I don't know the near term. I can't tell from looking at these charts, but this is one area. If it gets there and I see all this and I see the market confirm the US dollar, everything else, that would probably be a nice long entry on gold. Okay, and before we get to the miners, let's just look at the other precious metals, starting with silver. I have a couple boards on silver. You can see a downtrend line that comes in here. It's a very significant downtrend line. Comes in around a very significant level, or will when the two get there together. They should intersect. In other words, you know, you're not going to get to that 1522-ish level today. So if we worked our way up there, you're going to have intersecting resistance, very well defined, strong, you know, resistance. That was a very important support going back 2 years. I could even go back longer and you'd probably have more reactions on this trend line. So longer term, just like I gave you a longer term buy signal on gold, if it took out that level I covered earlier, you want to see silver do the same here. And right now I have another board. Let me show you that for silver. This was a very significant basing pattern right here, and we broke out of silver, and we didn't just limp from it. We had an impulsive move up, and so we've come back in to backtest that. So silver, I may have covered this in the last video, I can't recall, for that 14 is a very important support level. Certainly offered an objective entry, and would again if you continue, you know, and pullbacks to that level with a stop somewhat below. You know, you're going to see some whippiness. Sometimes they'll run below a support level. So, you know, if you buy at 14, you don't put your stop at 13.99. You give it a little room, but that's an objective level. I can't make a screaming case to go long. You know, we did just come off, just like gold, we just came off a divergent high and then followed up with a trend line break there. But again, the big question is that the correction, is that all we needed? It certainly satisfied the measurement. You look at the widest part of that channel or wedge-ish type pattern, that certainly, you know, could satisfy the move there it needed. And so that would be the bullish scenario. See, you know, we already tested 14 once. Maybe we do it again, maybe not. But if that test holds, come on up here and then look for a breakout above that trend line, as well as that 1525-ish level I showed you. I had the trend line on the other chart drawn a little higher. You can see it there. And then you have platinum as well. I like to, you know, this is a, you know, one of my preferred charting proxies, plus you can trade it as well as an ETF, PPLT, and it's been an active trade for what seems like forever. A story on this one: we got in, we quickly hit our first target right here, we bought it here, hit our first target, reversed just shy of the second target, came back down, still stayed above our stop, made another run, and so far reversed again just shy of our second target. Well, what does that tell us? Well, you know, maybe this is not tracking futures perfectly, but these were, you know, this is a significant level, and at this point with two reversals just shy, what I should do is lower or add a second line to that level. I'm going to sit tight on this one for now, or at least that's what I'm leaving it on as an official trade. But that's, you know, that's kind of the level now. We'll call it a resistance zone, if you will, that it has to pop. We can see a downtrend was right here as well. That was, I don't know where that line went, but, you know, breakout back test, and so far moving up. We just need to, at this point, break out. So that's the story, I guess. You know, the dollar has been strong. And you know, if you look at it this way, although the dollar has rallied now for quite a while overall, it's not taken the precious metals down. So they're showing resiliency. Yes, they're not shooting up, nor are they going to, very unlikely, with the dollar strength. But they're not dropping down as much as they have been. In other words, they've respected these lows. And so basically you need to see a lot of everything I just showed you, silver, gold, platinum, kind of break out of these you know, basing patterns and the resistance levels that I showed you there. And then one more is palladium. Palladium is like the Energizer Bunny lately. You know, it's in an uptrend, not anything I would chase at this point, but again, no reason to short it because it has a very well-defined price channel it's in, and it continues to very much respect that line. Look at all those candles. I mean, you can't, you know, you get a little spike here and through there, but overall, that's a very, very well-defined trend line price channel. There's your divergence pushing up, pretty big divergence. There will be a correction coming soon, most likely. You know, these don't always have to march to the same drumbeat, you know, gold, silver, palladium. But you know, again, this one, like I said, you can't really do much with it here. Got a couple clusters, you know, it is a commodity. There was an island top right there. You can see 3 candles separated, so you have a potential for an island top here. If it were to gap down below that island right there, let's just put a line right there for you. Wrong tool. Let me delete that and grab a line tool and show you. There's the bottom of the island. There's another island right there. So big gap down would actually take it below there and there. Well, you'd want to confirm it on the palladium futures charts, but I just want to point that out. Let's look at GDX now. Same story, and again, this is why I've been out of that trade. Divergent highs across the board on the metals and the miners. You had this on daily chart here. This is your divergence, and for those not familiar, these are, you know, this is the divergence line right here. Shows prices making a higher high against the indicators making lower highs. That's negative divergence, just like you had positive or bullish divergence here at that low right there. You also had pointed out at the time as well, a nice inverse head and shoulders pattern, neckline there, that broke out, back tested the neckline twice, and then off to the races. So this is the pattern we're looking at now. So, you know, it shows you that gold or GDX has been somewhat resilient. And remember, GDX in percentage terms will usually go up and down more than gold when gold goes up and down. But overall, it will track it. So where this goes depends on where gold goes. So let's not try to read too much into it. In other words, yeah, if gold starts to reverse, and sometimes there's a little disconnect there too. They might not. I've seen days where gold is up and GDX is down, but usually they're going to follow each other. So let's try not to put too much into this. I'm going to probably make it. I don't want to force any trend lines either, but there's potential right there. But of course, reaction highs are always, you know, a level to watch. So right now, that's what GDX needs to take out, and I wouldn't chase it unless the charts of gold confirm at the time. And to conclude, we'll look at the weekly chart real quick. Let me see if I can add a second trend line here. I have that. You can see the triangle I have there. Let's come in here. Yeah, either way, you can see that they look similar. It's not mere coincidence. There's sort of a triangle pattern that GDX has broke out of and it's back testing, or it already broke out of and it's well above when you look at that one. Either way, what this looks like going forward will depend on what gold looks like. and you can also see a pretty important resistance level up here. So I gave you a near-term target for gold if it holds that back test and rallies up. So this would be your target for GDX right here. It's about 13, almost 14% higher, that 25 level. And more importantly, this is what you have to realize. If you're in it and you ride it up to that level, you probably get a reaction there. But I think sooner or later we break out. And again, it all depends on the dollar. And if we do, I think GDX can run quite a bit. So that's a key level to watch. Okay, I think that covers everything. Again, I'll keep an eye on it. Just very near term. I can't make a strong case to step in and buy, nor do I have any intention or desire to short gold or GDX or anything at these levels. So we'll keep an eye on it. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.